Good morning, Brett. Good morning, Carolyn. Adair, good to see you. Let's just turn the video on. There we go. Hope everybody's doing well. Good afternoon, Carolyn. Thank you. Yeah, all well my end. Just wanting to keep it nice and steady today. Just reminded August summer trading can be a bit unpredictable. Got a few narratives that are just sort of unsettling the market. But heading into end of the month and the September, we're going to have a look at that on the seasonals. Great, Carol. That's fine. Yeah. I remember you explaining that to me before. That's it. Got you in stereo. Well, got me in stereo rather. Yeah, good idea. Yeah, good thinking. Well done. Keep all channels open. Hassan, welcome. Then, folks, let's get stuck into the session. So, a couple of things to note in terms of sentiment today. First of all, we have NVIDIA earnings coming up at the end of the session. So after the close, we have NVIDIA earnings. There's a lot of emphasis on what NVIDIA is going to say in regard to chip sales to China and how the tariff impact is going to be felt by NVIDIA in terms of their forward guidance. So look out for significant moves in the NASDAQ after hours. So just to be aware of that after the close. Sentiment, let's just check. I've got my squawk on. That looks like a little bit of a move. Yeah, the squawk is on. Sentiment could also be impacted by Fed's Barkin, who is speaking at 5:45 today. So that's after our session, but you'll be aware of it. We've had New York Fed Williams speak, and that's just been impacting the ES over the last sort of, 20 minutes or so with Fed's Williams, though we've just moved into this sort of key support area. So that'll be a major area that we're watching as we start. Looking at the S&P 500 from a technical perspective, we can see we had this Harami inside bar, false break of Harami inside bar, and the market is looking like it wants to test these highs. So looking out for a breakout and a push to the upside. Be aware of that just in terms of the daily time frame. And on the 15-minute, you can see that from a time price opportunity perspective, we're just opening up underneath that value area low for now. So price is pressured to the downside. In terms of sentiment, we've got 200 exponential moving average and a daily pivot point here, also alongside that value area low. So decent support sits on this region here. At the moment, just watch out for any sort of deeper dips lower. We can see that we're opening up imbalanced from yesterday's value area and expect sort of buying pressure down at this region here, with the value area here just sat around that 6446 region. So keep an eye on that price trying to push down before the open and trying to keep moving lower in the ES. We'll come and look at the ES in more detail. Looking at stocks generally across the board, you can see that the VIX is just pushing up a little bit. Stocks are pressured to the downside, and it is worth mentioning, if you look at September over the last 15 years, it's the weakest month of the year for equity markets. If you look at the S&P 500, tends to fall in September. If we just look at it here for 1st of September, see the average fall 0.80%. In the last sort of 5-6 years, we've seen some pretty big drops. If you also look at the NASDAQ, you'll see it's a very similar phenomena. Again, September's the weakest month of the year. Hey, Najam. So we're coming into a very weak period for stocks, even as we're about to break out on the upside, looking at the technicals. Equity markets are pressured lower now. Also be aware that in terms of if you look at the turn of the month effect, let's just see, if you look at the turn of the month, the first day of September, right, for the ES, you can see coming into the end. So we're in the 27th now. Now markets tend to be positive around the turn of the month generally. We are now on the 27th, so we've got 28th, 29th. So we've got sort of 2 more trading days left. So it's tricky. So there is potential for a little bit of upside today based on the seasonality around the turn of the month in the first 4 days before September begins. But just in the last 2 days before September, notice there is a sell bias. So whether we'll get that early because we've got the turn of the month going over the weekend remains to be seen. But just be aware, normally the turn of the month, that tends to be quite a strong period. But we could be coming up to the end of that now. And then at the start of the month, the first 4 days of September definitely tend to be negative. And after the first day, right, let's look over the last sort of 15 years, right, there is that sort of bias for weakness. So we're starting to come into a weak seasonal area, long weekend as well. So we could see some selling maybe start a little bit earlier, just to be aware of that. I'm just going to duplicate this tab here and just pull it out across. So I've got that on my other screen. Let's just be aware of that sort of strong support level that's just sat there. A couple of other things to note is in the bond market, just notice how the US 10-year yield has been relatively firm, even as the 2-year yield has fallen lower. There's a little bit of emphasis going around in financial markets, and this is to do with the potential for Trump trying to tell Fed's cook that she's sacked, and then she's going to hold on and try to fight him legally. The short end of the curve for the US Treasuries are falling lower because they're expecting interest rate cuts. We know that Powell signaled them that they're very likely to come. We've got 2 data points, non-farm payroll next Friday. Don't forget I'm away next week. And the CPI print coming on the 11th. 2 of those events are going to be significant before the next Fed meeting. So the short end of the curve says, yes, we're expecting interest rate cuts to come, but the longer end of the curve is just finding a little bit of support. And you can see that these bonds are being bought, but these are being sold ever so slightly. And if we just look at the 30-year, you can see that 30-year yields are pushing up. So short end of the curve is falling, the back end of the curve is rising. That's investors seeing trouble ahead longer term if the Fed can't be independent. That's what that's about. For now, we don't need to worry about it too much. Fed's cooked probably that price is going to probably be priced out of markets because it's not likely to impact the next interest rate decision from the Fed. It's not going to be until May next year that Powell has gone. So ING think that this will be, slowly faded out in terms of importance. And I think that's right. I don't think it's going to be massively important. Silver longs, copper longs, I've got longs in all those commodities based on the falling dollar and expectations that the Fed will be cutting interest rates in their next interest rate meeting on September. You can see here short-term interest rate markets, 83% chance of an interest rate cut coming up from the Fed. In terms of intraday opportunities, just note that Aussie New Zealand dollar. Now I know I went for a flag breakout in the Aussie New Zealand dollar immediately after the last RBNZ decision. I got stopped out of that. I used a tight flag entry, but just remember I did note that this channel here could be another potential entry. Little channel, breakout on unbalanced volume, and that's sort of been moving nicely higher. Not a trade I took, but just wanted to highlight it. Still had it up on my charts.
Want to be aware of a earthquake has been felt in Taiwan's capital, Taipei, according to witnesses by Reuters.
Gold, that structure is just building. That coiling action is increasing. So watch out for a potential breakout to the upside. I think that's going to be something that, at least there's going to be an attempt of that, it looks like. So watch out for a potential break of this structure to the upside. Definitely something worth keeping an eye on. Intraday trading could get a potential opportunity there if we get a breakout. If price sort of removes sideways, if we got a very weak jobs print or a weak CPI print, that's the sort of trade that could be a breakout and a run for a couple of days. So worth looking at in gold coming up to early September. Aside from that, we had some strength in the Aussie dollar on this stronger than expected inflation print. Came in above market's maximum expectations at 2.8%. So that just gave the Aussie dollar a little bit of strength earlier in the session, but that has since faded. So that Aussie strength, not something that I'm looking potentially to trade. And got a lot of uncertainty, summer trading. Yesterday was very choppy in the markets. So I just want to make sure today we're only looking for really straightforward trading opportunities that make a lot of sense. You can see here in the hourly chart, we've got this point of control just sat underneath this area. And we've got sellers who've trapped these buyers here. So price is looking like it wants to edge lower as we speak. And on the 15-minute chart, we're in a daily value area, price trying to move lower, but holding support at the moment. And you can see here, you've got some buyers here, which markets are trying to trap, but it remains to be seen what happens. Otherwise, this is a nice area for potential longs because it's a nice developed value area high here. And it could be an area where we move higher. Otherwise, the next major support level is down at that 6473 region, which is yesterday's value area high. So market is opening looking like it's going to be imbalanced, but we've had a little bit of selling come into the market on Feds Williams, as New York President Feds Williams was speaking. That's pressured market lower. If we can get up above these highs, and that's not a bad area for buying. If we stay underneath these lows, then looking for rally sellers, so price to move lower and then sell lower on rallies. So that's what I'm looking for. You got buyers getting trapped here, buyers getting trapped there. So just watching out
on the
see any further moves lower.
Magnitude of 6, according to the Taiwan Fire Department.
This is the key area, okay? That's the key thing to be aware of. It's this area here. We'll see where we get when we get to the open. 5-minute chart, you can see buyers trapped there, price moving lower. You've got buyers here. It'd be interesting to see if these buyers get trapped, then you might see a little bit of a further move lower ahead of the open. It's not bad, maybe worth looking at the tick chart. Just see if you get underneath that area. Could be a little flush lower here. Delta is building, you see. Buyers trapping sellers against this level, so that's a sort of potential turnaround level. Be interesting just to see what happens here. Just keep this on. See if these sellers are able to trap these buyers, then its price looks like it's clearly trying to trend lower.
Commentary from NEC Director Hassett, speaking on Fed's Cook, says the honourable thing would be for her to leave.
So sellers
or to take leave.
Trapping buyers there with the second standard deviation. The only problem with this is it's a nice value area. So we'll have to wait and see. I'll come back at the open and see where things are going. Inventory from the start of the session is negative. Right, so inventory is now going negative. Sellers have stepped in more strongly in recent trade. And on the 15-minute, we're in this value area high. An obvious turning point, but then underneath is the value area high from yesterday. So market remains imbalanced, and the question is whether it goes balanced or imbalanced. Looking at the VIX is pushing up. Stocks are generally pressured, and just notice the underside of this major trend line has held as resistance. So that's worth looking at. Although I do know this will look like it wants to even have a false break of that area potentially. So it's worth looking at as we go through the session. Folks, I think that's the major thing. Tomorrow we've got initial jobless claims, and we've got Fed's Waller. So you could see a bit of volatility on either of those.
About 5% in pre-market trade.
Market very sensitive to labour data now. What with the admission from the Fed that they're sort of concerned about slowing labour data for now. Folks, that's it for now. We'll go and get myself a cup of tea, and we'll be back for the open, and just carefully watching this area where we're sat in, this big value area. It's going to be important as we get to the open, so we'll come back and look at that. And some sellers coming in. The 316 contract came in short there. That's second standard deviation's holding price. You can see here in the 5 minutes, a retrace up to that level. Maybe a retrace up to the standard deviation could look for sellers. There is selling building here. Right, so this is the area to potentially look for selling up there. Right, see if you get any buyers trapped against the first standard deviation. That would be so. See if we get any buyers trapped here. So just seeing now, there's no buyers trapped there at the moment. Okay, so watch for sellers from this point here. See if we get any sellers come in here. Right, have a quick sell there. That's not going to work as a sell. Okay, have another go if I can get underneath that level. And now the VWAP. So those sellers are trapped down there. But this is a decent area for reversal. Let's see if we get anything against that VWAP. I'm going to try another short there. Just stops above the VWAP here. Back to that standard deviation test. We may just get support there because of that 5-minute candle there, trapping those sellers. Yeah, okay. One last attempt at a short there. Just got that. Some sellers maybe trapping some buyers there. That's it. Now I'm out of that again. Point control move right up to where price is now. That could act as a cap for price. Let's have a look. All right, try another short. On balance when it's moving lower. The point control staying here, acting as a near-term cap for price.
Commentary from the India July economic report says immediate impact of US tariffs on Indian exports appear limited, but the secondary tertiary effects on the economy do pose challenges.
So 15-minute has managed to trap those